Man, these Tesla earnings got me looking like this guy over here. This ad over here for TradeStation. Oh, what? That's what I assume he sounds like. Gosh dang, what are they doing here? Beats by $2.14 per share. This was a company they were supposed to be doing negative earnings per share this quarter. Negative. What? And they massively made some money. That's a massive profit there. But revenue was down 7.6% year over year, which is rough. They missed on the revenue number, but still, that is an extreme beat on EPS. And now, after market, shares are somewhere around 10% up, so a little bit above 10%. This will go into the highlights, and then we're going to go ahead and look more in detail with them. Tesla shoots higher after posting an unexpected profit. It delivered 17,483 Model S, okay, and 79,700 Model 3s. So, not 100,000 vehicle delivery, but it's okay. They definitely didn't quite meet their goals in terms of delivery, in terms of cars sold and delivered, but it's interesting. Gross margin was down, which is interesting, how they saw profit there. I don't know. Again, it's a very interesting perspective. Like, how in the world did they decrease margin and go ahead and increase profit significantly? I mean, there's something. They have to have something, so we'll look into it. Shanghai Gigafactory 3, already producing full vehicles on a trial basis, which is the Shanghai Gigafactory, in case you were curious. So we'll see how that goes. Really won't see much major production in any sort of delivery until next year, so interesting to see how that's going to happen. Looking forward, Tesla is highly confident it will deliver more than 360K vehicles, down from prior guidance. Yeah, I mean, they tend to highball a little bit, Elon. Elon tends to highball just a wee bit. A conference calls at 6:30 Eastern. Be interesting to look at that, but this is just preliminary numbers we're going to look at. Model Y is on track to be released summer 2020. And Tesla semi-trucks are scheduled to be produced next year as well. So the Model Y, obviously, if you don't know, it's this little guy here for Tesla. Look at this little baby car. Look at it. It's a little Volkswagen Beetle looking guy. Look at him. He's a little tiny baby car. But yeah, that's a little baby car. We'll look into some of these highlights here real quick. So here we go. Here's an important thing. Cash. $383 million in cash increase in our cash and cash equivalents balance to $5.3 billion. Now, considering that, if you look, this is obviously a company that is holding $14 billion in debt here as is. So it's certainly important to increase that cash flow, and if they could keep doing that, that's pretty significant. We'll see how it goes for sure. Gigafactory's ahead of schedule. Model Y ahead of schedule. They always keep saying these ahead of schedule. Record vehicle productions and deliveries. Okay. Record storage and deployment of. Okay. I don't know why I said it that way, but that's interesting. So batteries there. Automotive revenues. I mean, if you look here, year over year, obviously a decline. It's something noteworthy. Just being honest there. So obviously, Q1 this year was a rough one, as you can see, very rough one. But quarter over quarter, not much increase going on. Year over year, down in terms of automotive revenue, and down in terms of profit as well. So it's something to consider. Total revenues down 8%. Total gross profit, again, down 22%. That's rough. But operating expenses were down. That's where you see a little more of that profit come into play. What else do we want to look at? Obviously, pretty interesting. I mean, just look at this history of EPS here. It's insane. I mean, that's the big question now for Tesla, really. I mean, you think about it, 2 quarters ago, they lost $4.10 a share in EPS. Last quarter, they lost $2.31, and that's after posting a quarter of, $1.82. So what the heck is going on? I mean, the question obviously is going to be sustainability. Whether or not they can keep doing what they're doing and making that work, right? So if they, have 2 good quarters again and then post another one of these garbage quarters, which is highly plausible because I don't necessarily see if there's enough proof to say there's positive increase, you know what I mean? Obviously they are still growing, but it doesn't look like it in terms of, revenue they've made. It really doesn't look like it, but overall they're still in the process of growing. So obviously it just needs to be consistency. They need to consistently make profit, obviously, because if there's one thing Elon Musk can do, this company should have been underwater a long time ago. But Elon Musk can raise capital like no other, so he's always going to have unlimited money. Whatever money he needs, he'll find a way to get it. So that's what's keeping Tesla alive. And obviously they want to get to a point. If you're a Tesla shareholder, you're going to want this company to get to a point where they don't have to raise capital, because that devalues shares usually. Traditionally, it depends on how they do it, but usually that'll. Oh my gosh, that was wild. It was like it was following me forever. I wanted to hiccup, but it wouldn't come out. But yeah, you're gonna want to go ahead and we want consistent wins in terms of earnings per share. We want consistent profit. They haven't proven anything regarding that yet, so I'll need to see a full year. Personally, I would like to see a full year of profit, because even this is down year over year. This $1.91 still down year over year in terms of what they made in EPS. So, percentage of leased vehicles, obviously this is a big factor too. So they're not necessarily getting that profit off, purchasing the car, because they're leasing Teslas now, which that's what they're blaming for the impact in revenue loss, which makes sense because people aren't buying the cars. So it's just leased money, so it's borrowed, just a borrowed car. So I can understand where that's coming from. Again, we'll see. Reduction of average sale price, right? Because Model 3's cheaper model, so selling more of those means you're going to see a decrease. Automotive gross margin improved to 22.8%, as we talked about. And obviously we talked about cash already as well. So Model X production, again, year over year is what I care about here. Model S decrease of 39% year over year. Model 3 production, though, increased 50%. So obviously Model 3, it's their car. That's just kind of what they're living off of. Model 3 is Tesla's baby, and they're increasing production on it. But deliveries down for the Model S. But obviously, again, it's that mix. They're switching over to this Model 3 where it's becoming their higher selling model, which is increasing. So that's something to consider. Quarter over quarter, you don't really see that increase. Obviously, and there's a major increase in leasing as well, because they just started leasing, as you can see in Q2. So that's pretty exciting for them. That leasing is revenue added later. So again, it gets more people knowing the Tesla brand. So that's kind of the point of this leasing. People can see a Tesla, test out a Tesla, and then decide if they want to purchase a Tesla, or they could just lease it the entire time. I don't agree with leasing vehicles, but to each their own. Solar deployed, right, that's down 54%, right? Storage deployed in terms of MWH, increase, baby. Residual solar cash and loan percentage down significantly, but that's okay. It's not too significant. It's not too significant, really, but it is down. Store and service locations, an increase in store locations, Tesla locations by 18%, which is certainly interesting. And the mobile service fleet, kind of like those people that'll come out and repair vehicles if they need to be repaired. It comes with that Tesla warranty. People will go ahead and do that, and obviously they've increased the amount of employees that are going out and doing that. Supercharge stations increasing, which is important. You want to see that. Supercharge connectors increasing and destination charging connectors increasing as well. So you want to see, obviously, that it's a flourishing sign. They're spending more money on that to increase that business further. You don't want to have to drive 30 minutes to charge your Tesla, in my opinion. And obviously they want to get to a point where every major city, or every city is going to have a Tesla station to charge. Obviously, no one wants to wait around, go park their car for 3 hours in a place that's not their home and, wait 3 hours for it to charge. No one wants that. People want their Teslas. They want to drive them. They don't want to have to wait. Okay, I agree with it. But interesting stuff here. Obviously, they're talking about Shanghai deliveries here, or production. So we'll see how that boots up. They're in pre-production, and then everything else here. Europe Gigafactory is now in production. They're working on making the Gigafactory in Europe, and the Semi in development, Roadster, and the Tesla pickup in development. And then eventually they'll work on getting these things to market. Goodness me. Autopilot and full self-driving. You got that right. Tesla's always working on improving their self-driving through a lot of test courses. One important thing about Tesla is all the data they have in terms of just roads. They're kind of like the head in terms of data regarding that. They hold a lot of data regarding U.S. roads, pretty much anything. Your Tesla's always learning, so if it doesn't know how to self-drive a certain road, it will learn if you have to actually manually take over. They have people that actually study that, and they work on that algorithm and fix that autonomous driving to where next time, hopefully, you don't have to necessarily overcorrect and steer yourself. It should be entirely a fluid drive. That's what they want. They want the vehicle to drive everywhere. It can't necessarily do that 100%. Obviously good for stuff like highway driving, but some of the back roads and stuff, very difficult for Teslas to do, and there's nothing crazy about that. So they'll get there for sure. Obviously, we'll entirely see how that goes. Obviously, the autopilot continues to increase, so that's going to be exciting for them. Highest selling or highest range for electric vehicles, obviously Model S, Model X here. Always, Tesla leading in terms of range. Range is how many miles you can drive, obviously, on your battery charge. And Tesla's leading the way in terms of that. Certainly interesting to see. Tesla Energy storage deployment reached an all-time high. That's right. They got energy to give, so you can charge your car up. You already know what it is. Faster deployment, lower overall install cost. Gotta love it. And again, Tesla Insurance launched in August. Just another way for them to go ahead and and make money. People don't have to go to a third party for insurance. They can buy their Tesla insurance with their Tesla. Just makes sense for them in the long run. Deliveries should see, this is, obviously looking outward. Deliveries should increase sequentially and annually, with some expected fluctuations from seasonality. We are highly confident in exceeding 360,000 deliveries this year. Nothing absurd with that number. It's not crazy high. Obviously, it is an improvement, but obviously you want to see higher numbers than that. If we're talking about significant growth, I would have much rather liked to see a 400K number there at least, but They could lowball and beat it. That's kind of the goal there too. If you lowball and you beat, it looks better. But if you lowball and you also also fail, that'll be rough. Positive quarterly free cash flow going forward. Possible temporary exceptions, meaning they're going to go ahead and try to make profit every quarter, but if they don't do it every other quarter, then they just told you that they might not. So we'll see. Again, they're claiming they can make profitability consistent. It's really just an important thing about seeing that. Possible temporary exceptions. That's a key for them, so no one can be upset whenever they fail to hit EPS goals or they fail to make profit. They can go ahead and and argue that. They can't argue anything whenever they were told, but continuous volume growth, capacity expansion, and cash generation are the main focus. Obviously, some pictures from the Gigafactory. Look at that. Put that Tesla together, baby. Ooh, look at that frame. Sleek. B-15. B-15 stealth bomber. Look at that. A nice blue coating. That's going to be a nice looking Model Y at some point. Here's the Shanghai Gigafactory outside. Look at that thing. It's a massive, massive building. It's crazy how quickly that's gone. 10 months. It's gone from plot of land to this, where they're producing. Crazy stuff. Crazy stuff. Operating cash flow. Again, you see an improvement here, which is nice. Obviously, Q1 was awful, as we spoke about. Net income, still not a good chart by any means, but there's a chance, obviously, that this stays positive. Again, I don't buy it. Long term, I just don't see Tesla making money. It's going to be a while before they do. I mean, if you just look at this chart, where's the improvement here? It just looks sporadic. There's 2 or 3 quarters where they actually made money. It's just sporadic. I don't think they're going to be making money for quite a while still. They have just too much development they're working on. They're going to be losing money hand over fist until then. Obviously it was one good quarter. If we're looking long term, look at this. You see vehicle growth, obviously, but I don't see any increase really in profit. I don't see it, but this is trailing 12 months. Net income, which is what we care about, or at least I care about, negative here. I don't see them making money that often. Year over year, in a year basis, let's say that. So full year for Tesla, I say it's going to be at least 4 or 5 years before they actually make money in a year. I don't think that's completely absurd. They have a lot of development they're working on, new vehicles they're working on, so they're going to be spending a lot of money on development in the meantime. So, again, that's all I really have to say about Tesla earnings. So, very big earnings beat, but if you look deeper into it, obviously, I still wouldn't invest in the stock just because it's been stagnant for 5 years, and it's going to continue to be stagnant until they can actually make some money and justify their valuation. At some point, maybe they can, but again, we'll see. It's good improvement for them, but I just don't see this being a viable long-term, profitability thing. I think people might look too much into it if they think that this, after they said this is the turnaround, that it's going to be the turnaround. So we'll see how that goes. Alrighty.